Good evening. I'm Peter Resnick from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, March 6th, 2022. Title of this video is How to Read the Market, and I thought I would go into some of the techniques that I use, very specific in how I read the market intraday, especially now, because it's a very difficult market to read, and I really believe that if you don't have the right tools at your disposal, you're not going to be able to read the market correctly, especially when the market is acting as it is currently with lots of relatively volatile moves and what seem like fake outs. And a lot of people, I think, make the mistake when they try to get into intraday trading or short-term trading, they focus just on patterns, but they don't really look a lot at context. And those of you who have been watching these videos for a long time, you know that I speak of context all the time. And only when you're able to put price action and price patterns together with context, that's when you know you have either the confirmation or denial of that pattern, and it gives you either the green light or red light as to whether or not you should move forward. So today, as I'm recording this, it's the close of business on Friday, March 4th, and I thought I'd just start with this screen because this was my activity today in futures, ES and NQ. Not really a major like barn burner type day, but over about 10 grand on the day, which is solid. Certainly I've had larger days than this, but I wanted to specifically start here so that we could start off on the right foot and that you understand that everything that I'm about to tell you in the video is not just theory, that I actually put this stuff to work day in and day out. And when I'm trading intraday, looking at futures and things like that, these are the tools that I'm using every single day and how I'm looking at the market. All right, let's begin. Quad. Been doing this for years, going on 15 years now. I think we've been looking at this particular screen. This is something that I came up with a very long time ago. Everybody on my team uses it, and I've been teaching it to thousands and thousands of traders ever since I came up with it. And over the years, I've been refining it as the years have gone on. I've added things to the quad and I've taken things away from it, but this is the quad in its current iteration. Obviously, it is called the quad because it is the 4 charts set up in this manner. Later on in the video, what I'm going to do in order to show you how these tools were helping to keep me on the right side of the market today, we're going to look at each one of these individually on top of the ES futures for the day so we can get a comparison of where the turns were in the market and what the internals were telling us. But before that, I just want to give you a recap of what everything is here if you are unfamiliar with the quad setup. So first is, of course, starting with the upper left. This is the breadth, okay? And we measure the breadth in the chart here on the New York Stock Exchange. But if you'll notice, I've got these bubbles up here, which tell me what the breadth relationship is for the NYSE and the NASDAQ, which is important. I want to look at both of them. And as a little bit of a refresher, if you don't understand what the breadth is, the way that we calculate it here, this is simply the relationship between the up volume and down volume, meaning that stocks that are moving up has one tally, stocks that are moving down has another tally, and it is the net of those right here, which is called the vol-D. It's the U-vol minus the D-vol, and then these ratios here are the up volume over the down volume, more in a ratio manner. So when you see these numbers here up in the bubbles like 1.83 to 1 and it's red, this tells you that the amount of volume flowing into down stocks was almost 2 to 1 the amount of volume flowing into up stocks, right? And again, I keep that for NYSE and NASDAQ. All right, let's move on to part number 2, which is the weighted AD. Now, those of you who have been following me for a while, you know that this used to be the advanced decline line on the NYSE, and some people use the advanced decline line just on the S&P. I've scrapped that, and I've started filling up this entire quadrant with just the weighted AD, okay? And this is the script that I've been talking about for a few weeks now that we came up with recently. And it is absolutely a game changer. I highly recommend that everybody check this out on our site. But again, I've taken the price graph, it's called the price subgraph inside of TOS, but I've taken the price out of the chart and I've just put the study here, taking up the whole chart. And again, that's our weighted AD study, which, to recap, simply plots from the open the 11 sectors on the S&P in a weighted manner and in an unweighted manner. So you can see here in today's, this white line here is unweighted and the histogram is the weighted. And you can see how big the divergence is right here. And I'm going to get into that shortly. This is a fantastic day actually to look at how powerful this indicator is because there was so much going on in the chart, which I'll get to shortly. Okay, let's move on. Bottom left, ticks. I look at the price action here on only the NYSE, but be aware I do have more real estate that I'm trading with than I show you here. I'm showing you this particular quad setup for those of you that have limited screens, and really this is the bread and butter of what you need, but in the interest of full transparency, I have more screens up than just this, and I like to keep NYSE internals and NASDAQ internals running next to each other. So I do also have a NASDAQ tick on another screen, but for the intent and purpose of the quad, you just need one. So you've got your NYSE ticks here, and then very important, underneath it, make sure you've got the cumulative tick script, shameless plug, also for sale at ShadowTrader.net under the stocks tab. Put the cumulative tick underneath it. We're going to be looking at that later as well because it gives you a lot of added information on top of just the regular tick chart. And then, of course, last but not least, over here you have the market. And basically what I do is right now this is just set to an SPX, but generally during the day I have this set to either ES or NQ, depending on what I'm trading at that moment. As you saw from the initial screen that I showed you, I go back and forth. I'm not really beholden to one or the other. I'll trade NQ one moment and I'll flip to ES the other moment. Usually why I do that is just according to relative strength or relative weakness. The momentum in those two futures tends to move and shift a lot. And you can there's a lot of different little tricks that you can use, which might be beyond the scope of this video, but there's a lot of things that I look at intraday that will tell me which one I want to be trading at that time. So that's the one that I'll have in there. This bottom right-hand quadrant is basically going to be anything you trade. I like it to be the broad market. If you're new to trading and you're just trying to get your feet wet and all you're doing is just taking notes and marking internals and getting a feel for how the market moves, I would say you should probably put the ES futures in here or SPY, all right? So that's basically it. That's a recap of the quad. And now let's move into a more granular look at how every one of these components was acting as today, which is Friday, March 4th, was unfolding. Okay, let's begin with the first internal. This is the one that's in the upper left of the quad and is called the breadth. As I was saying in the beginning part of the video, it's a chart of the up volume minus the down volume. So that up volume is the volume flowing into stocks that are up on the day. The down volume is stocks that are down on the New York Stock Exchange. And we look at it two ways. We look at it as a regular chart, which is U vol minus D vol. That's the vol D that you see in the chart. And then, of course, we also look at the ratios. Both are really important to look at over the course of the day. Here's some caveats and some things you need to think about in terms of watching the breadth with the price action. Firstly is that the breadth, although it is the first thing you're going to be looking at because it's in the upper left of your quad and you're kind of reading it, breadth, and then look at your weighted and then look at your ticks and then look at your market. Even though it's that first thing, be aware that it moves the slowest. So you're not going to see the reaction so much like that matches up with the price action so perfectly. You can see how much the ES rallied from here, and yet you only see this little uptick in the breadth. And that in and of itself is some market generated information that you can use, because if the market was really changing far more dynamically and to the upside and a real sort of changing of the guard, so to speak, you would see the breadth move a lot more, and potentially you'd see these ratios start to get positive, okay? So that's one thing you want to remember about the breadth, is that it moves very slow, so it's not really one of the internals you're going to be looking at for minute moves or to really time your entries. You're going to be thinking about the breadth more as sort of an overriding governor of the market telling you what the situation is, okay? And you're going to be watching very closely these ratios, as I was saying, because over the course of the day, these ratios are going to tell you how much buying pressure or selling pressure there is. A good rule of thumb is that if the market is going to continue on a certain trajectory, be it up or be it down, you want to see these ratios at least 2.5 to 1. You know, really like 2 is kind of like the base case for some decent direction. If these numbers, as you can see into the close on Friday, because we rallied a bit into the close, notice that the breadth on the NYSE closed at only 1.83. When there's a number 1 in front of, you know, as the first number there, that you can call it like a 1 handle in front, that tells you that the market is relatively neutral, actually, to be honest with you, because the difference in the pressure between the up volume and the down volume, that ratio is getting closer and closer to 1. So 1.83 to 1 is not really all that bearish. And obviously, this is a read at the close. These numbers move and shift over the course of the day. NASDAQ was a little bit more bearish, 2.79. But you want to be looking at what this ratio is. And for instance, to give you an example, when you see a day, for instance, that is more of a trending day, you'll easily get ratio reads that are going to be 4 to 1 positive, 5 to 1 positive, 6, 7, or negative, depending on the direction that it's going. And again, you just want to keep that in the upper left as sort of an overriding theme as to what kind of day you're having. And to look at it a little bit more granularly in terms of how it applies to today, it would be safe to say that obviously we were weak off the open, and we had pretty firmly negative breadth right off the open. Notice that we started to trend down right away. And then even when we rallied here, notice that eventually it was shortable because you never really had that changing of the guard. You never really got that breadth to be fully positive at all. You never crossed the zero line in the other direction, right? And the last thing I'll mention about the breadth is be very, very aware of the divergences between the NYSE and the NASDAQ. This is something that a lot of people miss. It's a really, really important piece of context. And earlier in the video, I said that I will very often, when trading futures intraday, I will very easily switch between ES and NQ back and forth. The reason I do that, as I was saying, is because I'm noting where the relative strength or relative weakness is. So for instance, let's just give you like an example. If this was the read that we were seeing during the course of the day, let's just say it was the middle of the day, and this happened to be the numbers where the NYSE breadth was 1.8 to 1 negative and the NASDAQ was 2.79, on down moves, I'd be shorting the NQs, but on up moves, I'd be buying the ES, because you can see that obviously the relationship here tells me that the S&P is a bit stronger than the NASDAQ, and that's very, very helpful when deciding which instrument that you want to be trading. All right, let's move on to the second block of the quad, which is the weighted AD. I am so excited to keep sharing information about this particular product with you because I believe it is a game changer. It has totally taken the quad up to the next level. As I was saying earlier, I am constantly over time, I've been improving the quad and taking some things away and adding some things. And this particular very recent addition to the quad, I believe, is the best thing yet. It is absolutely amazing. So up here, I have the weighted indicator, and as I was saying earlier, I've taken the price action away, and I'm just using that particular quadrant just to look at this weighted AD. Note, before I get into how it matches up, I do have the open here matched up on the yellow line, but be aware that the 5-minute here and 15-minute here. So there's a little bit of a different time frame, so it's not, you'll see in a moment how I match it up, but there's a reason for that. I always keep my AD on the 5-minute. Those of you that are using this product, you may want to consider that because I believe the best signals come from that particular time frame. It's a little bit faster than the 15s, and it kind of gets me on the right side of the trade a little bit quicker rather than keeping it matched up 15 to 15. But anyway, let's take a look at the price action from today. Again, this is Friday, March 4th. We know that we had some choppy action at the open, but eventually we sold off and then continued selling down to about here, and it was about just after 11. And what was the relationship here in the weighted at that particular time? At the time, it was confirming. Remember, the histogram that you see is a cumulative calculation from the open of the advancement or decline of the 11 sectors that make up the S&P in a weighted manner. That means that this histogram is calculated in such a manner that it's giving far more weight to, for instance, infotech, communications sector, healthcare, than it would to energy, real estate, materials, things like that. This is very, very important because obviously the price of the S&P 500 and the ES futures that you are trying to trade is only going to move with the 500 stocks that are in it, and the 500 stocks that are in it are only going to move according to the groups they are in, right? Generally, Infotech moves with Infotech, and all the communication stocks move together, and consumer staples, et cetera, et cetera. So we use this tool to plot what those 11 sectors are doing from the open. And again, we plot them in a weighted manner using the histogram and an unweighted manner using the white line. So the early activity today was bearish because you can see here we have both of them underwater. And it is noteworthy as you're watching the market go down, because it is going down in a relatively choppy manner. I was telling my folks in the weekly options advisory today, we had a live session, and I was asking them on a range of 1 to 5, did you think that today was an easy day to trade or a hard day to trade, with an easy day being a 5 and a hard day being a 1? And the average of most of the answers was like 1 and 2. A lot of people thought it was a relatively difficult day to trade, and I agreed. I gave today a score of about a 2 on the easy to hard because there were a lot of fake outs. But as the market's moving down early on, notice that you have your weighted confirming, meaning that the yellow and purple histogram is moving lower, but at the same time, the weighted is slowly kind of climbing to the zero line. So right off the bat, that probably is what is responsible for some of the choppiness, because you obviously have some buying pressure in a lot of the less weighted sectors. And we know this to be true because we know that at the end of the day, this is how things ended up. So take a look at this chart. It's really, really important, this snapshot that I have here. And note that what is at the top here, and this is measured from the open, by the way, and I took a snapshot of this from another platform because thinkorswim doesn't do this. I don't believe you can look at stuff from the open. You can code it into a script, but you can't just pull up a stock and say, give me the net change from the open. But I've got it on another platform. And notice where the leadership was today. It's in energy, utilities, real estate. And look at the weights here. Together, what does that make up of the S&P? 3.7, 2.6, that's 5, that's 6.3, right? 8, about 9, right? This is like less than 10% of the S&P, but these are the sectors that were leading, and look what's down at the bottom. All this heavyweight stuff, right? Infotech, consumer discretionary. Notice how when you add up this stuff, you get almost half the S&P, and those sectors were doing what from the open? They were down from the open, right? So this is also important to look at. I keep this up on a separate screen, and I'm noting that, but the information that is within this is coming to me in that weighted AD script. It's essentially giving me all of this put together with the histogram and the white line, the unweighted. Even if I didn't have the ability to look at it this way, I'm getting it sort of all in one as I'm watching that upper right in the quadrant. So let's continue on here. Let's keep looking at this weighted and see what we've got. We've already established that we've got unweighted sectors, such as the ones we looked at, utilities, real estate, etc., that are a lot stronger than the heavyweight sectors, which is adding to a little bit of the chop. But when does the turn come? Look right here. You see that you're going down, and everybody's probably thinking, oh, hunky-dory, coming into about 11 a.m., everybody's probably thinking, oh, this is, short. The news is so bad. We've got the Ukraine situation, the nuclear reactor, etc. This is what a lot of people are thinking because they are not looking at market generator information, which is context. They are just piling in on the short side, but not noticing that what's happening here right at the same time around 11 a.m., notice the improvement that starts happening in the sectors. The trend of the histogram actually starts to be up. So you have that confirmation right there. If the market was to be trending lower the entire morning and into the midday, if the trend was to continue without this particular reversal, you would see the histogram continue to build lower and lower and lower. You would get it all the way down, as you see here. You see how it just keeps building lower and lower and lower and getting really, really deep reads. But that didn't happen. Instead, you got it the other way, started to rally, and so much so that look here, look at the signal here that you got. The unweighted sectors actually went positive, and boom, they were off to the races. The unweighted sectors were off to the races, and all of that corresponds with this rally right here that went up to about 1 p.m. In the afternoon, as you can see here, topping out right here. And then notice the shift here. And this is interesting as well, is that when you see this sort of divergence where the weighted is rallying so hard, unweighted, excuse me, I apologize, where the unweighted is rallying so hard, and yet the weighted is not. You can see that it takes a while for it to get positive here. This also tells you that this is the type of rally that is probably going to fall apart unless the weighted sectors start to really print to the upside, which in this case, they don't. And because these sectors don't start really printing to the upside, it's really not happening. A lot of times, all you're getting in the market is a lot of short covering momentum, and that's what the price action is telling you. But you need to have tools like this to tell you what is really happening under the hood, what's making up that price action, so that you know whether or not it is sustainable or not. And obviously you can see that you had such a big divergence here between the unweighted and the weighted sectors. And as you come up to here at 1 o'clock, you have a playable move to the downside because this is unsustainable. This is not the type of thing you want to see as a rally. And you probably have a lot of people, getting in long positions or whatever at the wrong time. And you see the market start to come down right at that time. Why? Because as I was saying, this is unsustainable. And then you can see the continued down move as it dribbles lower. What's happening, confirmation, is that those weighted sectors are getting more and more bearish. You still have some positivity here, but it's not really enough to fully, get the market to be bullish, and you get this sort of sideways chop into the close. Makes perfect sense, doesn't it, when you put it together with the weighted, right? What type of day did we have? Was it a straight trending day where it was upper left down to lower right? Was it more of a, up, down, then back up, or whatever? Was it this type of day where you had this down, then up, and then this sort of sideways to down into the close? Again, rather than just guessing, you need to have these types of tools in front of you that can tell you the confirmation of what's happening under the hood so that you see it. So this one really here was a game changer. Main takeaway, I would say for me, how it helped me was when I saw this relationship here stop, I knew that the shorts in here were no longer going to keep working. I was shorting the market into here, and I wasn't really getting as paid for it as I thought I would. I really expected a little bit more of some move down. And then when I noticed that this relationship was shifting and those weighted histograms started to move up, I said, aha, let me just, abandon this. This is not going to be working. There's potential here. This could rip in my face. And money saved is money earned. And basically you just kill the shorts right there and, either wait it out or potentially go long. And in this case, that actually would have been the play, because you can see the market actually moved up quite a bit from there. And last but not least, let's talk about the nicey tick, which is the lower left of our quadrant. You'll note in this particular example, I've purposely not put the ES chart underneath for the comparison because it gets a little wonky on this screen sometimes. And I wanted to show you specific nuance, especially here in the tick chart, that I'm worried that you would not see if I had it scrunched a little bit. But remember, for the sake of this discussion, that the move that we're talking about in the market, where we came down and then went up and then came off a little, that move was roughly between 11 or 11:15 and about 1 p.m. So just keep those times in mind, and you'll see them. You'll see it marked off here. That's 11:15. I can just move it a little bit. Okay, so when the market was coming down, and as I was showing you already from the other examples, it failed to go lower. This is a nuance that you can really use, and I hope it's really helpful to you, but it takes a little bit of practice to really keep an eye on it. But I'll show you exactly how I read the tick chart, basically. If a move is to be sustained, you should see continued tick action in the same direction, and you should not see tick action that actually starts to trend in the other way. A lot of people think this is not possible. They don't really think of this because they look at the tick as just a lot of barcode or back and forth. But I actually do like to put a little bit of technical analysis in terms of trend lines on my tick. And if I'm in a short position in the ES and it's coming into like late morning, right, where there's potential that there could be a turn anyway, right, because we think of the market, we break up the day into reversal periods, right, like 10 a.m. is important, 10:30 is important, around 11:15 is important, 2 p.m. is important, 2:30 is important, right? When we're coming into a potential reversal period, notice what happens at this 11 a.m. mark where we know that the market started to shift to the upside. What was the relationship in the nicey tick? Notice that it stopped making lower lows and it actually started making higher highs. And look at the tick action all the way up here as we got towards the mid part of the day, right around 12 o'clock. You can see we really started rallying, and there was definitely a shift in tone where look at where the majority of the tick action was here, right, earlier in the session. Right, really here, this is really the part of Friday. And then notice what happens here is you get all this tick action above, basically. This is important. It's very, very nuanced, but you want to keep an eye on this. You want your nicey tick indicator to be holding in the same direction and not bouncing, okay, and not bouncing if the move is to be sustained. And that's what we saw there. Now, a little bit of note about this here underneath, the cumulative tick. This is useful, but similar to the breath, it tends to move slower. So you can see here, you have confirmation action of the down move, but notice that you don't start moving up in the cumulative tick until about 12. So kind of at the tail end of that rally, but there's still some money to be made on the upside. You can see that this also is not confirming, so that's important. So again, you've got this sort of confluence of these two things happening together where you're getting the higher ticks coming in. They fail to make lower lows. You notice you have all these minus 1,000 prints here, then that stops. You keep going up. This goes lower for a little bit longer because it lags a little bit, but then it starts to lift up like here, and it really confirms that, aha, this move is not going to be continuing on in my favor if I'm going to keep pressing the bet to the downside. And that's basically how I was looking at the market on Friday, March 4th, 2022. Now, a couple of notes to understand, because I get a lot of questions on this stuff all the time. It's not perfect. You're always going to get situations where there's going to be divergence that you might not understand, like, well, the market's doing this, why is this going up and why is that going down? It's going to happen. There's a lot of art to this as opposed to science. Science is absolute. It tells us how things are, and it's not an opinion. It is what it is. There's a little bit of art to this, so understand that. And you really have to also look at all of these things all together en masse. As I always try to teach people, I say, if you spend 6 months, a year, whatever, watching these internals, making notes on the price action, even preferably without trading at all, it's really how I tell people that they should start their trading journey, is really by just watching the quad and the price action for months and months and taking notes on it and understanding it. As you're doing that, understand that you need to be taking in all the information kind of all at once. And if you spend that time and you put in the effort, you'll start to be able to interpret all this stuff very quickly. And even if there is some divergence where you have anomalous signals where everything is pointing in one direction but one thing isn't, you'll know over time what to put the weight on and whether or not it's a green light or a red light, you know, if it's a go or not. And say, okay, I've got 3 out of the 4 things or whatever all pointing in this direction. I've got this that's not confirming, but you know what? That's an anomaly. I'm going to go with this. Or sometimes there's other situations where the opposite is true. It says, oh, look, everything seems to be pointing in one direction, but why are the ticks so weak? Like if it's up, why am I constantly seeing a nicey tick that can't get up over 250 or 300, right? And it's just kind of banging up at that level, which is a very low read, and yet the market is kind of trying to move to the upside, and all your other internals might be bullish, right? So I'm just giving you like examples of how this tends to play out in real life. So get this up on your charts, practice it. It is really worth your while. The 2 components of it that are not available for free on thinkorswim, which would be the weighted AD and the cumulative tick, those are for sale at our website at ShadowTrader.net. I've put links to both of them in the description of the video below. Let's switch gears for a minute and end the video on a more macro view, which I know that many of you come to these videos to see each week to get my opinion on the technical analysis of the S&P and where I think the market is going. Let me just say this is an extremely difficult market right now for that particular time frame. The swing trading time frame, which I define generally as the 2 to 5 day, maybe up to about 1 week, 2 weeks, etc. That time frame, that's really, really difficult in the current environment because, as you can see, this has been the price action as of late, and you're getting a lot of 1 day up and 1 day down, basically making that sort of time frame just not working, basically. And I've always said this: when the going gets tough, the tough day trade. And any of you who are watching this video and have some experience under your belt, you pretty much know that that's true. That a lot of times there are certain periods in the market where honestly, there's a lot of good money to be made in the day time frame, but there's no money to be made in the longer time frames, right? And this, I think, is one of those times. Certainly over the last 5 or 6 sessions, you can see we've just been in this big congestion. But let's talk about the bigger picture of where this might go in terms of some scenarios. So I am still working from the framework on a tentatively, I mean, as best as I can hold on to this, even though I'm not really holding anything long and I don't really have any long exposure, but we have to assume that this low here is secure because of the amount of shock and awe that happened where you had this down move, you had the capitulation, the market actually opened lower that day, went a little bit lower, turned back to the open, and then had this huge rally. And since then, we haven't come off much from that rally. Even though we are in this situation of this extreme chop, we still haven't come down. If you look at the move from the low here to the high here, there actually hasn't been that deep of a retracement, and all of this activity over these last 6 sessions, is really all in a range. So you've got this kind of balance area happening, and this is going to be very interesting next week because it brings what we call balance rules into play. Notice how the lows of this move are all relatively equal. You have all 3 across here, and for all intents and purposes, the highs are relatively equal. So remember, balance rules are going to be in play next week. And how do the balance rules work? Very simple. They give us a framework for different scenarios that could happen depending on the different price actions. So we could either look above and go. We can look above and fail, which means that we would then travel to the opposing end of balance. We can look below and go, or we could look below and fail, which means that we would travel to the opposing end of balance to the upside. So that's one way to look at this market. Keep in mind, we have balance rules in play for next week, and that could happen. My particular take on it is I am thinking that the market basically should be more bearish here than it is. The news flow out of Ukraine is horrible. We have the rate hikes coming, although the market feels like it's pricing that in. Powell gave some news this week and said, look, given the uncertainty that's happening geopolitically, et cetera, everything that's going on, he's basically telegraphing that he's not going to do a 50 basis point hike. He's going to do it 25 basis points at a time, or at the very least, it's going to be only 25 at that first hike in the March meeting that's coming up soon. So that is a piece of information that we can use. Maybe slanted a little bit more to the bullish side. Obviously, the Fed is being very, very transparent, so everybody knows. The only thing that would derail that, obviously, is if he decides to pull a wild card and say, okay, whatever, I'm doing 50 basis anyway. You know, maybe the inflation situation, by the way they read it, gets worse between now and then. I don't know. But this is essentially the ruling reason of what the market is keying into right now. Uncertainty over what's going on in Ukraine and this inflation situation, and how many rate hikes and how fast and how aggressive the Fed is going to move in this first half of 2022. All right. That being said, again, potential here is that this low is secure. However, if we were to lose the low end of balance, then we have to be very careful and watch closely for a couple of different scenarios. Either we come down hard, which I don't really, that's really not the way I'm seeing it. I'm just saying that anything can happen news-wise, overnight, whatever, that could drive the market that way. But absent any news, this pattern usually doesn't work out that way. So I'm thinking that we will stay in balance and then break out of balance to the upside. If not, if we go below the low of the balance area next week, you have to watch very, very carefully, because it could be a look below and fail, which, as I was saying, in case, get long, target the other side of balance, or, and this is the scenario that really will be the most difficult to trade. I mentioned this today to my weekly options advisory folks in a private session that I was doing. I was saying the worst outcome for this particular market in the coming time ahead is going to be a move below the low end of balance, but without much momentum and with the same back and forth that we've been seeing this week, and it just dribbles lower down to this low, which could happen. And that, I think, is going to be the worst case scenario, because it is constantly going to be, you're thinking that, is it happening? Isn't it happening? You're going to get some rip your face off rallies in the middle of it. So we shall see. But overall, I can't stress enough, very difficult market right now. I am definitely trading far less in the swing trading time frame. Even in my weekly options advisory, those of you who are subscribed know we've been trading less, we've been trading lighter, and we've been really careful to set up situations where we don't have any call debit out there that's going to hurt us if the market falls apart. We're being very, very careful. Now, going forward even further, from a technical basis, the downtrend is still in play, so keep this in mind. And if we were to get a rally to the opposing end of balance here up to the top, remember the trend line is in play. And at that point, I would say, given the price action and given how this has come here, H pattern across and then up to here, I would not think this is shortable. So just be aware of that. If I see 4,400 next week, I'm telling you right now that other than a short-term short, maybe on the day time frame, I would think that that would not be shortable. And the reason is this, and this is something that a lot of people miss in technical analysis, and that is this. When you set up a trend line, you have your 2 points, and then you have the point that's about to come into play. When you, I'll clear this up, when you approach that trend line in a very sideways, choppy manner, coming to it sideways, okay? Generally, it doesn't fall from that trend line. The way that you trade a trend line resistance is you have it like this, and the price action comes up like this, and when the price action comes up hard to it, okay, that's a short, you see? But if the trend line situation looks like this, and you go like this, you come up to it, you fall down, and then this move, you go to it like this sideways, that's important, okay? That's gonna go through and break. That almost never falls down. So the way that prices approach trend lines is very, very important. And I'll give you a pro tip. This sort of thing works on all time frames. When I am looking at a day trade, and I use trend lines all the time, a lot of what I do on the day time frame is mostly just trend line analysis. When I see price action that is coming to the trend line slowly, instead of being underneath it and rallying hard up to it, right? If I see it just sideways crawling towards the trend line, I'm not shorting that trend line, because I've learned over time that that's not the price action that's going to cause that trend line to react. The price is actually going to probably continue to consolidate sideways through it, and then everybody in the world is going to realize en masse, oh, we've broken trend. It's kind of like a self-fulfilling prophecy, and then you start to get an up move. So remember that. It's very, very important. How prices come to the trend line makes a big difference as to how that trend line is going to react. And that's all I've got for you this week. I thoroughly hope you enjoyed this video as much as I enjoyed making it for you. I feel like I shared a lot of really salient and pertinent information about how I think you should be watching the markets, how you can better interact with the markets, obviously, and be a much better trader, all right? Links to the pieces of the quad that you need to kind of, as I say, put it on steroids, meaning that weighted AD and the cumulative tick. I've put links to that in the description below. If you enjoyed this content, please do me a favor and hit the like button. I'd really appreciate it. And also subscribe to this channel so you can be alerted as to when I post new content as well. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.